Infosys is in the news for all sorts of reasons this year. First, it was the glitches in the IT portal, and later it became the first company to be termed anti-national. But those who have been following the markets have had an entirely different reason to track Infi, and I'm going to tell you why. Since the time the world went into lockdown mode due to the pandemic last year, Bengaluru IT giant Infosys has seen its share price rising almost 3 times. The company's share price touched an all-time high of over 1755 rupees per share at the end of August this year. Let me put that in a little bit of context. When Infosys went public in 1993, it opened on the stock exchange at 145 rupees a share. If you had bought shares of Infosys worth 1 lakh rupees back then, you would have accumulated over 12 lakhs now. This increase is better than what some of its peers like HCL has offered. HCL listed in 2000 and its share price has increased from 122 in January 2000 to trade at around 1188 per share currently. This means an investment of 1 lakh back then would now be 9 lakhs. The pandemic aided the growth of the entire IT sector, but Infi is among the leaders in the IT pack with an 80% growth in just 1 year.
So definitely, Infosys has been better among the IT giants. It's not that the others are not performing. HCL has given around 34% return if we talk about this calendar year. But then I think one advantage which Infosys has, if we compare to its peers, is it has a very good grip on the BFSI sector. So if we see the portion of revenue which Infosys has from this banking and financial services, it is 27% of its overall revenue. So a major chunk of its revenue is coming from the BFSI sector, and I think this is giving it an advantage if we compare it to its competitors.
The last time Infosys saw such a rally was way back in 1999 after the dot-com bubble, when the share price zoomed from 11 rupees to 170 rupees per share in 2000. Between 2010 and 2020, Infosys grappled with instability and corporate governance issues. However, its recent digital acquisitions have helped strengthen its portfolio, and this came just in time for the pandemic. Even the recent complaints regarding the IT glitches might not affect its performance much.
I feel it's unlikely because the India exposure is less than 10% for Infosys and other larger Indian IT companies. Also, their primary markets are Europe and US. So I don't expect any material impact to the Infosys revenue growth performance. And there other geographies are really doing good. The other geographies like US and Europe, and that large deal with data is quite tremendous. So I feel that it has very limited impact in terms of the future revenue growth and EPS, because that's one of the smaller market for Infosys.
So the big question: do you buy, hold, or sell those Infi shares? So Yog?
See, so I am expecting that Infosys is likely to have a double-digit revenue CAGR for FY21 to 24. Given that this is a technology rally, is likely to last for I feel like it's 2 to 3 years. So I have a buy recommendation on Infosys, and target price is around 1920, and we expect that the market cap should reach 110 billion.
Likhita?
It will definitely be a hold because we have talked about all the good prospects. Definitely rupee appreciation can impact the IT companies, but then for people who are looking for long-term investing should still sit on their portfolio and just watch the rally, because I think it still has quite upside in the coming quarters. So definitely it is a hold for investors who have already purchased it.
What do you plan to do? Let us know in the comments below.